And minutes from the Federal Reserve's January policy meeting show that the FOMC may actually be less hawkish on interest rates than investors are expecting. Some major headlines. Majority of Fed members see further gradual rate hikes on stronger economic outlook. The Fed sees few signs of wage growth, believes wages will pick up with improved job growth. Many Fed officials increased their estimate for economic growth from December, but several Fed members are warning imbalances in financial markets could emerge as growth improves. There's an internal debate between the hawks and the doves on inflation and uncertainty among members about tax reform and how it will manifest in wages and the economy. Many Fed members view economic impact of weaker dollar, high stock prices offsetting higher bond yields. Some key quotes for you on interest rates. A majority of participants noted that a stronger outlook for economic growth raised the likelihood that further gradual policy firming would be appropriate. But members agreed that the strengthening in the near-term economic outlook increased the likelihood that a gradual upward trajectory of the federal funds rate would be appropriate. That is why they added the word further to the statement, further gradual increases. Quotes on tax reform and its impact on the economy. Quote, several participants expressed considerable uncertainty about the degree to which changes to corporate taxes would support business investment and capacity expansion. And of course, on wage growth. Key quote, while some participants heard more reports of wage pressures from their business contacts over the intermeeting period, participants generally noted few signs of a broad-based pickup in wage growth in available data. That said, a number of participants judged that the continued tightening in labor markets was likely to translate into faster wage increases at some point. And finally, on the economy, spending on durable goods, quote, to replace those damaged during the hurricanes in September, may have provided a temporary boost to consumer spending. The key headline here is that it would appear from the minutes of the January policy meeting that the Fed is less hawkish on interest rate increases. Back to you.
Because these are eternal doves we're talking about. These academics that believe they alone hold the solution to our economy. Go ahead.
Trish?
Yeah.
There's a key issue that gets brushed over here, but in the labor report from January, we were talking about 2.9% wage growth year over year. But in actuality, for non-supervisory employees, that's the majority of people in the country, wage growth actually fell to 2.4% year over year growth. Mm-hmm. And that is something they don't talk specifically about that in this, but it's an issue.
Still pretty decent. Adam.
No, it's below. It's actually below the 2.5%. I'm not going to say whether it's good or bad, but it was below what we had experienced. And that is a key issue on wage growth that people are not talking about. Everyone's talking about 2.9, when in reality, for the majority of Americans, the pace of wage growth actually fell, according to the January jobs report.
Well,
and you see that reflected in these minutes.
1 month. I mean, January, that was before the tax cuts had taken effect. I mean, they don't know as the tax cuts are going to work. That seems to be what they're doubting right now. I'll tell you, that's good news for the market because, hey, party on. Adam Shapiro, thank you so much.